What if the cash in your wallet had an expiration date? What if every single coffee you buy, every dollar you earn, and every move you make could be tracked, controlled, and even shut off by the government? This isn't a scene from some dystopian movie. It's the future that governments all over the world are rushing to build with something called Central Bank Digital Currencies, or CBDCs, and it could mean the end of your financial freedom as you know it. In this video, we're going to expose how this new system could give a handful of central bankers and politicians absolute control over every dollar you earn and spend. We'll break down what CBDCs are, why they're being pushed so hard, and reveal the 5 hidden dangers that could change your relationship with money forever. Stick around, because what you're about to hear is one of the most important and underreported stories of our time. To understand the threat of CBDCs, we first need to get what money is and what it's turning into. For most of history, money has come in two main flavors. First, you've got physical cash, the notes and coins in your pocket. This is a direct central bank liability. When you hold a dollar bill, you're holding a direct claim on the central bank itself. It's real, it's anonymous, and when you hand it over, the deal is done. Then there's the money in your bank account. This is called commercial bank money. It's just a digital number on a screen. And technically, it's a liability of your private bank, like Chase or Bank of America, not the central bank. When you swipe your debit card or use Venmo, you're just asking your bank to move these digital IOUs around. The system works, but it's full of middlemen. Now, a third kind of money is about to enter the ring, a central bank digital currency. A CBDC is a digital version of a country's currency that is a direct liability of the central bank. Think of it as a digital dollar or a digital euro held by you in a government approved digital wallet. On the surface, it sounds like a simple modern upgrade. The people pushing this will tell you it's all about making payments faster and cheaper. They'll talk about financial inclusion to help people without bank accounts. They'll say it's a necessary step now that cash is being used less. According to the 2025 Diary of Consumer Payment Choice, based on 2024 data, cash was used for just 14% of all payments in the US. And yet, more than 94% of people still use cash as a primary or backup payment method. The trend is clear. The world is going digital. Central bankers argue that if they don't create digital public money, private companies will, pointing to cryptocurrencies and stablecoins as a threat to their control over money. And this global race is moving at an incredible speed. As of late 2024, 134 countries, which make up almost all of the world's GDP, are exploring a CBDC. Of the G20 nations, 19 are already in advanced stages, developing or piloting their own digital currencies. While only a handful of countries like the Bahamas, Jamaica, Nigeria, and Zimbabwe have fully launched a retail CBDC, their experiences are already sending up some serious red flags. So, governments aren't just thinking about this, they are actively building the plumbing for a brand new financial world. The real question is, what kind of world are they building? Is it really about convenience and inclusion? Or is it about something else entirely? Is it about control? To answer that, we have to look past the slick sales pitch and see what makes a CBDC so different from any money we've ever used. That brings us to the 5 hidden dangers of this new financial system. Danger number one: total surveillance and the end of privacy. The first and most obvious danger of a CBDC is the total destruction of financial privacy. Physical cash gives us something incredibly rare today: anonymity. When you buy a coffee with cash, that transaction is just between you and the shop owner. No one is logging the time, the place, and what you bought. That privacy isn't a bug, it's a feature. It's a foundation of a free society, preventing governments from easily monitoring the private lives of their citizens. A CBDC, by its very nature, is the exact opposite. Because it's managed by the central bank, the system creates a central record where every single transaction can be logged and watched. Every purchase, every donation, every transfer, from a multi-million dollar business deal to buying a pack of gum, could be recorded in a government database. Think about what that means. It would create a permanent, searchable history of your entire financial life. They'd know your political leanings from your donations, your religious beliefs from your tithes, your health problems from your pharmacy trips, and your social circles from who you send money to. This isn't a wild guess. It's just the technical reality of a centralized digital ledger. This collection of data is a goldmine for hackers and a terrifying weapon for state surveillance. A government might promise to only use it to fight crime. But what happens when the definition of crime changes? What happens when a government decides that certain political ideas are a domestic threat? We don't have to imagine this future. China's digital yuan, the ECNY, is already being tied into its social credit system. Your spending habits can affect your social score, which then dictates whether you can get a loan, travel, or even get your kids into a good school. As of mid 2024, cumulative transactions in the ECNY pilot have already reached 7 trillion yuan, or nearly $1 trillion. The infrastructure for control isn't just being built, it's being used and expanded right now. Recent reports from the European Central Bank on the digital euro talk a lot about privacy, but their solutions are full of holes. They mention privacy enhancing techniques and holding limits. But at the end of the day, the system they're building is centralized. As one expert from the Bitcoin Policy Institute put it, even if surveillance isn't built in at the start, it would be trivial to add it at a later stage. The simple truth is this: a world with CBDCs and no cash is a world with no financial privacy. It's a surveillance state's wildest dream. It creates a power imbalance so massive it threatens the very idea of individual liberty. Danger number two: programmable money and social engineering. If total surveillance is the first danger, the second is even more disturbing: programmability. Programmable money means that rules and restrictions can be coded directly into the money itself. Your money would no longer be a simple tool for exchange. Instead, it would become a weapon for enforcing policy and controlling your behavior. Let me give you an analogy. Think of a gift card. You can only use a Starbucks card at Starbucks. You can only use a gas card to buy fuel. Now, imagine your entire bank account worked that way. That's the power of programmable money. How could this be used? The potential is nearly endless and deeply unsettling. First, your money could come with an expiration date. To stimulate the economy, a central bank could issue digital dollars that disappear if you don't spend them in 30 days. Your right to save would be gone by decree. This isn't just a theory, it has been openly tested in early pilots of China's ECNY, where giveaway funds were designed to expire to force people to spend. Second, your money could be blocked from buying certain things. A government worried about public health could program your CBDC to stop you from buying sugary drinks or red meat. A government pushing a green agenda could limit how much gasoline you can buy each month. Once you've used up your carbon allowance, the pump would simply shut off. They could block you from buying a firearm, from purchasing books they label subversive, or from donating to a political cause they don't like. Third, it could be used for automatic taxes and fines. Imagine getting a speeding ticket and the fine is instantly ripped from your wallet without your consent. Or a system where every purchase you make has sales tax automatically skimmed off and sent to the government in real time. It sounds efficient, but it eliminates any chance for you to dispute the charge. This isn't just about controlling what you buy, it's about controlling you. It turns money from a tool of freedom into a system of mass scale social engineering. The most infamous quote on this comes from Agustin Carstens, the general manager of the Bank for International Settlements, BIS, often called the Central Bank for Central Banks. In a 2020 presentation, he laid out the vision with chilling honesty. He said, and I quote, "EEY, we don't know who's using a $100 bill today, and we don't know who's using a 1,000 peso bill today. The key difference with the CBDC is the central bank will have absolute control on the rules and regulations that will determine the use of that expression of central bank liability, and also we will have the technology to enforce that. Absolute control. The technology to enforce that. He's not hiding the plan, he's advertising it. The world's top central bankers don't see programmability as a danger. They see it as the main attraction. They see our financial freedom, our ability to choose what to do with our own money, as a glitch in the system that they can now fix. This transforms money from a tool that empowers you into a leash held by the state. This is a critical moment. The decisions being made right now in the quiet halls of central banks will shape the future of our financial freedom. If you found this valuable, take a second to hit the like button and subscribe. It tells the algorithm this conversation matters. And before we continue, make sure you sign up for our weekly newsletter at the link in the description. I send one concise market update every week. No spam, just the essentials you need to stay ahead. Newsletter members will also be the first to get access to our upcoming macro investing class. Now let's get back to the third danger. The third danger is a direct result of the first two. A CBDC creates the single greatest consolidation of financial power in human history. In our current system, for all its flaws, power is spread out. We have thousands of commercial banks and credit unions. This creates a small buffer between you and the raw power of the government. If you don't like your bank, you can take your business elsewhere. That competition creates at least some accountability. A retail CBDC could essentially nationalize the entire financial system. Even in a so called intermediated model, where private banks help manage the wallets, the central bank owns the ledger and holds all the authority. This means that for the first time ever, a single government body would have a direct line of sight and control over the nation's entire flow of money. This concentration of power makes the whole system incredibly fragile and easy to abuse for political reasons. The power to grant access to money becomes the power to control society, and the power to deny access becomes the ultimate weapon. This is what you can call financial deplatforming. We saw a terrifying preview of this in early 2022 in Canada during the Freedom Convoy protests. The Canadian government invoked the Emergencies Act. Without court orders or any due process, they ordered banks to freeze the accounts of protesters and even people who had simply donated as little as $40 to their cause. The government announced they now had the tools to follow the money and could see what was being planned in real time. Hundreds of bank accounts were frozen, cutting people off from their ability to pay rent, buy food, or support their families. Think about what happened there. The government had to pressure private banks to do their dirty work. It was clumsy. Now imagine that same scenario with a CBDC. The government wouldn't need to ask anyone. They wouldn't need an Emergencies Act. With just a few clicks, some bureaucrat could simply turn your money off. No judge, no jury, just a digital kill switch. Your participation in a protest, your support for an unapproved movement, anything could lead to your complete exclusion from the economy. This isn't a long shot. It's the logical conclusion of a centralized, government-run digital currency. It creates a permissioned system where your ability to buy and sell is no longer a right, but a privilege that can be taken away at any moment. The very idea of private property starts to dissolve when your access to it depends on your obedience. This danger gets even bigger on a global scale. Projects like M-Bridge, a joint effort between the central banks of China, Hong Kong, Thailand, the UAE, and now Saudi Arabia, are building the infrastructure for cross-border CBDC payments. They say it's about efficiency, but it also creates a powerful new network for enforcing sanctions and financial blockades, completely bypassing traditional systems. An alliance of nations could decide to deplatform an entire country or even individuals within it with terrifying speed. The promise of CBDCs is a sleek, modern financial system. The reality is a system that hands the keys to our entire economic lives over to a small group of unelected bureaucrats and politicians. Danger number 4. Financial exclusion and the war on cash. The fourth danger is sneaky because it's wrapped in the positive language of financial inclusion. CBDC supporters often claim these digital currencies will help the unbanked. They argue that anyone with a phone can get a digital wallet, even without a traditional bank account. While that might help some, the bigger push for a digital only economy will actually leave millions of people out in the cold. Who gets left behind? First, the elderly. Many older people aren't comfortable with digital tech and still rely on cash. In 2024, adults 55 and older used cash for 19% of their payments, far more than younger groups. Forcing them onto a digital only platform would be stressful and open them up to scams and tech failures they can't handle. Second, low income individuals and people in rural areas with spotty internet. A financial system that needs a constant internet connection is a system that fails the second the power goes out. Third, people who value their privacy for very real reasons, like political dissidents or anyone living under an oppressive government. For them, cash isn't just convenient, it's a lifeline. It lets them operate without the state watching their every move. Getting rid of cash means getting rid of their last safe haven. And this brings us to the unspoken goal of the whole CBDC project, the war on cash. For this surveillance and control system to work, there can't be any escape hatches. Cash has to go. This is already happening. In Nigeria, which launched its Naira CBDC in 2021, the government tried to force people to use it. They placed harsh limits on cash withdrawals, creating a massive cash shortage to strong-arm citizens into adopting the Naira. The result? Chaos, public outrage, and a complete rejection of the digital currency. As of early 2024, the Naira accounted for only about 0.36% of the currency in circulation. The people knew they were being forced into a system they didn't trust, and they fought back. The lesson from Nigeria is crystal clear. When people have a choice, they choose freedom. They choose cash. That's why the end game for central bankers has to be eliminating that choice. They won't call it a cash ban. It will be a slow, quiet death by 1,000 cuts. Banks will stop stocking it, stores will stop accepting it, and one day it will just be a museum piece. They'll sell this as progress, a move to a cleaner, cashless society. But a cashless society isn't a more modern society, it's a more controlled one. It's a society where every single person is chained to a digital grid with no alternative and no way out. The final danger is the most ironic. In their quest for total control over the financial system, central banks might just break it completely. Introducing a CBDC could blow up the entire commercial banking system as we know it. Remember the difference we talked about earlier. The money in your bank account is commercial bank money. Banks take our deposits and lend them out to people and businesses to buy houses, start companies, and fuel the economy. This is called fractional reserve banking, and it's the engine of our modern economy. Now, what happens when a CBDC shows up? A CBDC is sold as the safest money out there because it's backed directly by the state. So, during a financial crisis, where would you rather keep your money? In a private bank that could fail, or in a 100% government guaranteed digital wallet? The obvious answer for most people is the central bank. This could trigger what's known as digital bank runs. In a panic, people could pull their money out of commercial banks and flood into the CBDC all at once. This would suck the deposits out of banks, destroying their ability to lend and causing a domino effect of bank failures. Central bankers know this is a huge risk. The European Central Bank has proposed putting holding limits on CBDC accounts, for example, a cap of around €3,000 per person, to stop this from happening. But just think about how absurd that is. They're creating a superior form of money and then immediately saying you can't have too much of it. Because if you did, it would wreck the inferior system we all rely on. It's a quiet admission that the two systems can't coexist peacefully. It exposes the entire project as a reckless and destabilizing experiment. Even in normal times, a slow drift of deposits from private banks to CBDC wallets would shrink the amount of money available for loans. This could cause a credit crunch, making it harder and more expensive for everyone to get a loan. And the central bank would become the main lender in the economy, concentrating even more power in its hands. And what about interest rates? With a CBDC, central banks could apply policies with terrifying precision. They could put deeply negative interest rates directly on your money, essentially taxing your savings day by day to force you to spend. The supposed goal of a CBDC is to create a more stable financial system, but its very design introduces massive new risks. It threatens to dismantle commercial banking, puts all lending power in the hands of the state, and gives central bankers dangerous new tools to manipulate the economy. They are playing with fire, and our economic stability is what's at stake. So, we've laid out the 5 great dangers: total surveillance, programmable money, centralized power, financial exclusion, and economic instability. The picture looks pretty bleak. It can feel like we're on a runaway train to a future we never asked for. But that future isn't set in stone. The most powerful weapon we have right now is awareness. The main reason this project has gotten so far so fast is that it's been happening in the shadows, buried in technical papers, and discussed behind the closed doors of places like the Bank for International Settlements. Most people have no idea what a CBDC is or what it means for them. They hear digital dollar and think it's just a new app. They don't get the fundamental power shift it represents. Our job is to change that. First, we have to educate ourselves and everyone we know. Understand the difference between cash, bank money, crypto, and CBDCs. Learn the arguments. Share videos like this one. Talk to your friends, your family. The more people who understand what's at stake, the harder it will be for governments to force this on us. Second, we must defend cash. Use it, advocate for it, support businesses that still take it. Fight back against the cashless push. Cash is more than paper. It's a tool for freedom. As long as cash exists, there's an escape from the digital prison. Its existence forces CBDCs to compete, which limits how controlling they can become. Remember Nigeria. Public resistance and a preference for cash can stop these rollouts in their tracks. Third, we need to champion financial sovereignty. This means supporting decentralized alternatives that aren't controlled by any single government or corporation. The rise of cryptocurrencies like Bitcoin was a direct answer to the failures of the traditional system. These networks offer a different vision, one based on open source code, math, and individual control. They are a powerful counter-argument to the centralized world of CBDCs. Finally, we have to make our voices heard. Let your elected officials know that you will not stand for a financial system built on surveillance and control. In the United States, this is becoming a major political issue. Imagine a scenario where a new administration, responding to public anger, issues an order to stop all federal work on a retail CBDC, calling it a threat to American liberty. That is the power of an informed public. This isn't a left versus right issue. This is a fundamental issue of human freedom. The battle over the future of money is the battle for the future of our society. We are standing at a crossroads. One path leads to a future of convenience, efficiency, and top down control. A world where every transaction is watched, your money is programmable, and your financial life is a privilege, not a right. This is the world of central bank digital currencies. The other path leads to freedom, privacy, and sovereignty. It might be a little messy. It might be less efficient in the eyes of central planners, but it's a world where you are in control of your own life and your own property. A world where money is a tool that serves you, not a weapon used against you. The choice between these two futures is being made right now. Central bankers like Agustin Carstens have been crystal clear about their goal: absolute control. Now we must be just as clear about ours: absolute freedom. Stay informed, stay vigilant, and never ever give up your financial sovereignty. Thank you for watching. If this message hit home, please share this video with at least one person you know, and let me know in the comments below. Which of the 5 dangers of CBDCs worries you the most? I read every single one. Subscribe for more reports on the forces shaping our world. And make sure you're subscribed, because in our next video, we're going to explore the ultimate escape hatch. We'll take a hard look at Bitcoin, comparing it directly to the CBDC model. We will discuss why this decentralized, censorship-resistant asset may be the most important tool we have for preserving financial freedom, and why it might just be a safer store of value than gold in the digital age that is coming. You won't want to miss it.